Hello and welcome to yet another edition of Who Moves the Market. It's Friday. I'm your host, Surabhi Upadhyay. Well, the market is really looking at earnings in a very close manner, and that seems to be the immediate trigger that's moving stocks, sectors, and the market as a whole. Now, when we come back to trade after the weekend, we'll be digesting two major numbers. On one hand, there's Reliance Industries that reports on Friday evening, and then there's ICICI Bank, which will be reporting on Saturday. So we thought we're going to bring in an expert to understand both of these companies, both of these stocks in a little more detail, look at what to watch for, and more importantly, look at the trajectory ahead beyond Q4 as well, beyond these numbers. What lies ahead for both of these titans, Reliance Industries as well as ICICI Bank. Dipan Mehta is joining me on the show today to deep dive into some of these facets. Dipan, thank you for joining in and welcome to your very first Who Moved the Market, our digital show.
Sabhi, thank you for having me on your show. I'm really excited to get cracking. I think investors and traders do like specific information on such huge events because that's a trading opportunity. And whether it's Reliance or ICICI Bank or any of the larger companies, whenever they report their earnings, if something is off the expectation or better than expectation, you can see an exaggerated move with heightened volume. So
Yep.
I think this does serve that class of investors and traders.
And speaking of exaggerated moves, we've seen enough evidence of that this earnings season already, right? Dipan, with Infosys falling 10%. I mean, who thinks that you'll see days like that? But yes, so your point is very well taken, that earnings can really move stocks. You can't write away numbers. So let's get started then. Reliance is the first one, Dipan. And I was chatting to our team internally to get a sense on what Mangalam is expecting from retail and what Rima is saying on Jio for that matter. Your own thoughts. I think the large consensus on the street is it's not going to be any sort of a surprise quarter. We're expecting stability on ARPUs for Jio. We're expecting growth to continue for Reliance Retail. And the core business, the traditional business, oil to chemicals, that's expected to move along fairly okay as well. That's our internal sort of, poll of all the analysts on the street. But what are you expecting?
Yeah, I think the oil to chemical again will be the one which will kind of generate the cash flow for the company. And because of absence of windfall tax rather, I would say, you could expect a decent set of numbers coming from the oil to chemical side. Reliance Retail, bit difficult to call because we are seeing big signal over there. And Reliance Jio, I think, would be more of a flattish quarter because the management has not been as aggressive as the street thought in terms of increasing their ARPUs or whatever tariffs they are charging. So more or less, I think it will be a quarter which will be in line. I don't think it's such an important quarter from the point of view of financial numbers. And the real question in the minds of investors is the unlocking opportunity. And we saw some of that when Jio money was being hyped off. And it's being split out or carved out of the company with the identical shareholding pattern, which means existing minority shareholders get free shares of Jio money. And if that's going to be the plan for the telecom business and the retail business, then I think that's great news for minority shareholders. So I think that from the street perspective, whether you're an investor or trader, the quarterly numbers are not as important as the corporate governance or the corporate action which may be taken by the management to unlock all these businesses. Because they are large businesses now, and it's about time that investors have a choice as to which specific division they want to invest in and which they want to avoid.
Your point is well taken, Deepan, and I remember the move on the stock that day. I think it rallied 4-5% when the next steps were taken in terms of the shareholders meeting, the lenders and shareholders meeting. I think it's happening early May when they move ahead and get all the necessary approvals to roll ahead with that plan of hiving off the financial services business. But, that brings me to the overall point when the market is expecting so much more from all of these various businesses that are firing away for Reliance. Why isn't the stock moving anywhere? In fact, it's down, right? Reliance has fallen about 9-10% this year. It's down 15 to 16% in the last 12 months. If you look at the last 1 year, what is troubling Reliance?
Reliance was the most outstanding performer right through the COVID period. They had one after another fabulous announcements and a lot of value got discovered. To an extent, it got overowned as well and a lot of long positions. But now I think many sectors have kind of come up pretty well, and many sectors also have started to perform much better. We are seeing money going away from Reliance and some of the other large cap companies, banks to an extent. Automobile, I think, have done exceptionally well, as has infrastructure. So one is the pure, simple money shifting away. 2, 3 years ago, Reliance was the kind of only game in town, but now I think there are many opportunities for one. And secondly, I think the delay on the part of the management to announce this kind of a split or a IPO for its businesses, that's the second concern. And Reliance Jio, to an extent, you could say that there's a mild disappointment because it still remains largely a telecom company and not as much the digital ventures, the digital initiatives are still not contributing materially. I think if you go back 2 years ago, when they had that fantastic presentation at the AGM, they were looking at how they could use technology for education, for healthcare, for governance, and on the retail side, how they would enable the kirana stores to get better value by associating with Reliance Retail. So all of those plans are still, I think, work in progress, and in my opinion, getting slightly delayed over there. So in one simple word, one can say that the triggers are not there in Reliance, and you really need triggers to move such a large cap stock. And that perhaps may explain the kind of underperformance which we have seen. But there is no doubt in my mind that it is a kind of a stock which must be there in every portfolio because of its weightage in the Sensex Nifty. And as I said, I'm most positive on this value unlocking opportunity as and when that takes place.
Okay, fair enough. Dipan, let's quickly just go over the business segments as well. I mean, the here and now for the company. So you said that oil to chemicals is expected to do well. Anything specific that you would watch out for? I have some numbers in front of me. I think Jeffries, for instance, is saying the EBITDA should grow about 10% quarter on quarter, 7% year on year. They're expecting the upstream business EBITDA to rise about 5%. That was refining EBITDA that I said. So refining EBITDA, 10% higher quarter on quarter. Upstream EBITDA up 5%. Just some street estimates out there. But what would you watch from the traditional oil and gas business? Oil to chemicals, rather.
Yeah, it will be not so much about the numbers, I think, this time around, as much as how much they are moving up the value chain. Even in the oil to chemical business, they are going in for higher value added products, specialty products. They're going for eco-friendly products over there, and they are setting up or have set up large capacities. So we like to see what progress has been made over there, because those are the ones which are going to drive the margins and profits for the oil to chemical business. The numbers, I think, pretty much we can factor in because we know what Singapore margins have been and what the spreads have been as far as the plastic production chain is concerned. So it's more of the new initiatives within the oil and chemical business, which I think will matter much more this time around than the actual numbers.
Yeah, absolutely. Let's talk about telecom as well. I mean, Jio. And there, while I think subscriber growth is expected to be steady, that's what Rima was telling us, but it's really ARPU. And we at least are looking at a lot of street estimates which are expecting very flat average revenue per user around that mark of 178 rupees. So what's the trigger? Do you expect tariff hikes, for instance? Will the telecom business be able to provide any trigger really in the near term for Reliance?
Yeah, I think at this point, I'm going to compare Reliance Jio, that division, with Bharti Airtel. And Bharti Airtel, clearly the management focus is on trying to increase their average revenue. They have been accordingly, strategically making changes to their minimum tariff plans, and they're actively trying to raise the kind of yield which they can get on the telecom services which they are providing. And they're not as much chasing new subscriber growth as others. But when it comes to Reliance, I think they're still going after market share. They still, all their plans, to compare, they are below what Bharti Airtel is offering. And maybe that's the strategy that they want to follow. But one should keep in mind that telecom also is reaching a past maturity state in terms of new subscribers. And the real trigger for Jio and when Reliance, when they start actually increasing the tariff, because these are great operating leverage businesses, and if you increase the tariff by even 4 or 5% or so, a large part of it will flow to the bottom line. And one concern is definitely there as far as Jio and Reliance Industries per se is concerned, is the low return on equity. I mean, it's more or less like single digit return on equity. And that's something which we always expect the management to work on to try and get more out of the return on the capital which they have invested. And Jio is a big investment which they have made. And the only way to improve the return on capital employed or return on investment over there is by trying to push up their ARPUs, which so far I think has been lagging slightly below street expectations.
Okay, so let's see if we'll get any more clues into the mindset, perhaps, in terms of growing the telecom business. That brings me to retail, and Deepan, here there is so much going on, right? From launching their platform on the beauty side to getting into their own in-house brands. A lot seems to be happening. The numbers have been good. What are your expectations from the retail business?
To be, I think they're just going to aggressively getting into almost everything that they can perhaps, lay their fingers on.
Yeah.
There have been acquisitions as well. And the entire picture earlier was more to do with FMCG products and more to do with household products. And they were going in the discount kind of retail side. Uh, but like the way DMart was trying to do, or the way, some of the larger ones were trying to do that. But I think that's not the case. They want to get into every segment of retailing. And I don't know how successful that's going to be because end of the day, they have got too much of competition in some of these specialty retail or specialty verticals as well in the retail industry. And frankly, it's a bit difficult to get a handle on how the retail business is going to evolve, which are going to be the product categories which will really drive the growth for the company. And I know they have been expanding their retail network and their footprint aggressively, but that's going to add to the cost as well. So I'm not getting a very clear picture when it comes to Reliance Retail, but maybe this time round we may have some more management commentary to explain what their exact strategy behind is retail. I mean, are they going to do absolutely premium, high end? Are they going to do low cost products, discounted products as well? So there has to be some cohesiveness, which at least is not apparent so far.
Well, yes, Reliance does seem to be getting into every segment, every part of that chain. Consumers right from the top end to the entry level. So fair point. We'll watch out for perhaps some more clarity in the commentary there. So before we move on to the next talk, Dipan, tell me this. What is that one thing, if at all, in the numbers in any of the businesses that could materially move the stock on Monday?
Oh, that's a difficult one to answer because it's a complex business. It's three companies they're trying to analyze together, and anything positive in any of the three companies is not going to really move the needle for the entire conglomerate. So I would pass this question if you don't.
Fair
I think
enough. Yeah, it's like three companies rolled into one, right? So we have to see a real big outlier statement, perhaps, or a major number for the stock and a large stock like Reliance to move in a very meaningful way, either up or down. Got that? That's a point well taken. Okay, let's move to ICICI Bank then, Dipan. And here as well, I've been firing on all cylinders. Growth has been good, loan growth good. I've got some numbers. I mean, our own poll is saying that net interest income could be up about 35, 36% for the year. Profits up 27 to 28% for the year. Asset quality is, of course, no longer a piece of worry at all. So first of all, do you like ICICI Bank as a stock? What do you think of it?
what do you think will be there? Not a single investor or trader who doesn't like ICICI Bank, and I think
Okay,
there is.
let me rephrase that question. Do you like it the most in the large cap private banking space or somewhere in the middle? I think that's a better question. Where is it in the pecking order?
I think it's not to do with fundamentals as much as it's to do with over ownership. And I've seen that play out in HDFC Bank at 2-3 years ago. It was the most overrun stock, and then for many quarters we are underperformance over there, even compared to peer group. And then suddenly ICICI Bank and Axis Bank really turned around exceptionally well under new management, and that's where all the attention and the money moved. But if you ask me to bet on a stock for 23, 24, I would put my bet on HDFC Bank covering lost ground compared to ICICI, even as compared to Sensex and Nifty. So that does remain our top pick amongst the larger banks. Not because of the fact that ICICI Bank and Axis Bank and others do not deliver good results. It's just that the positioning in the portfolio is such that there's a high degree of ownership. And the way ICICI Bank has been consistently delivering higher and higher, better than street and analyst expectations, we are building in a lot more expectations. And I wouldn't be too surprised if you have that sell on news syndrome when ICICI Bank numbers are announced, because it's being priced to perfection over here. Not only has the price, has the earnings moved up, and the book value moved up, but all the valuation ratios also have gone up in tandem, which is why we have seen the outperformance. But at some point of time, it has to take a breather, and maybe this quarter could be, this quarter onwards could be the time where you may see some sort of a stagnant to slightly flattish trend. But as I said, I think from the numbers, you will find nothing to complain about. It's just that, we've seen this thing very often that expectations are high. And unless ICICI Bank is able to materially beat whatever the street estimates are, I don't see the stock price really spiking up. It may have a mild uptick, but my bet is more that there could be a minor correction because of the news control.
Very, very interesting point. And I guess and it's important to keep that in mind because, yes, the stock has rallied 15-16% in the last 1 year. Though it's flat for the year. I mean, so far in 23, ICICI Bank hasn't done much. But okay, let's see if the market indeed gives it a bit of a cold response because of the positioning, as you're saying. So, Dipan, finally, before we wrap things up, beyond earnings, one more really interesting development that I think a lot of investors and traders will keep on their mind. That is the return of Mr. Kumar Mangalam Birla to the Vodafone Idea board. First of all, did it catch you by surprise, or was it expected on the street?
It's really a surprise move, and I think it's fantastic for Vodafone shareholders and all the stakeholders over there. It does inspire a lot of confidence, and maybe it is a precursor to the AB Birla Group investing a sizable amount in Vodafone. And, that can be a trigger point for other financial and strategic investors also to get into Vodafone per se. And of course, I think the government is extremely keen to have key players. They have put money where their mouth is by actually, converting their debt into equity over there. On the whole, I think it's just that Vodafone needs to address its debt in a more decisive manner and invest on 5G. And I think it's out of the blue. I mean, it's great because that is a stamp of approval that yes, Vodafone is going to survive this crisis that they are in. And who knows, maybe the entire might of the AB Birla Group may be put behind not just money, but there are many other network effects over there. There is management input. There are new flow of ideas. There could be integration of Vodafone services into some of the other AB Birla Group of businesses as well, new opportunities over there. So something is maybe brewing over there, which we don't know. But I think as shareholder of Vodafone, which we are not, thankfully, I think all of the stakeholders and shareholders will look at this development in very, very positive light.
Okay, got that. Well, Dipan, this has been a very, very interesting and informative chat. Thank you very much for taking out the time and speaking with us. And we will watch all of these three stocks very carefully over the course of the next week and coming months. But thanks, very helpful for you to explain all the sort of context around it.
Thank you, sir. We look forward to being more on this show.
Absolutely. Would love to have you on. Well, with that, it's a wrap on this edition of Who Moved the Market. Do keep sending us your feedback, comments and queries. We'll see you with more market themes next week.